Guys, in this video, I'm going to be back testing the 10 o'clock PO3, specifically the 1 hour candle. I mean, you can focus on the 4 hour candle, but usually price is going to move within that first hourly candle on 10 o'clock. And we're going to start just from this past week. So obviously Monday we will skip since it is our accumulation day. So we'll go on just the Tuesday. I'll lineate Tuesday. So this is our 2 a.m. candle. So we'll drop out into the 1 hour time frames. And overall, I'm looking, like when I was looking at this past week while I was trading it, so I kind of, it makes it a little bit, I'm just going to kind of walk you through what my process would be since I traded basically every single day of this week, at least besides Monday, obviously. But overall, like early into the week, something I really did want us to see in this kind of sense was a return up into this buy side above premium, because I'm expecting us to go lower. We're obviously going to need to go higher first, so this buy side right above premium is really nice to target. But our overall draw on liquidity is these lows, because as we know, candles are ranges, so at least this low right here as well, because we have this low to this high, price takes out this high, so then now we'll expect price to go to either below 50% and then retrace back up into a premium, or we'll expect price to take out this candle's low, because this is a high time frame weekly candle. So every candle is a range, right? This is, basically just how the liquidity works and how the market seeks. So as you can see, this week right here, we sweep it. So our first week is going to be a reversal week. So week 1 reversal, week 2 continuation, and then we'll want to see some kind of manipulation. I mean, we already got our manipulation at the highs, but right now this weekly order block does look to be holding, but we might go lower. So in terms of high time frame bias, that's what we see. And then right here dropping onto a daily, we're still kind of in this fair value gap. So that's kind of what we've been looking at. So we're still kind of looking for higher prices, but that's not good to say without a retrace sometime lower, possibly at the monthly open, which is a devil's mark, aka a really small wick printed. And then we have this 20-day if the look back low right here, which looks like a prominent swing low as well, considering that Friday was NFP linked to the monthly manipulation and we swept out this high. So overall, I'll be looking for price to go lower, but I do want to see us retrace into this fair value gap or in this premium level on the 4 hour first. So let's just drop down to lower time frames and let's see what we want to look for on Tuesday. So this is 5 o'clock, 1 hour candle, 6 o'clock, 7 o'clock, and then 8 o'clock was our news. So since 8 o'clock was our news, and additionally what we see here is we have this daily candle right here. This is a 1 day representing, as you can see kind of in the top right here. So this is our daily wickless candle. You can see below the open we have a volume imbalance right here. So that tells me that this area needs to be filled at some point again in the future. We kind of tap into this order block right here. This one on the 1 hour, we kind of tap just a little bit low equilibrium of this order block right here. So that tells me that we're bullish overall and our drawn liquidity is this high, right? But we don't quite take it out yet. So we'll go down to the 15-minute and we'll mark out our 10 o'clock open right here. So it looks like price seems to be making a run lower. Okay, at 9:30, what we do, we take out this low, and then let's see what price does after that. I believe we have SMT here as well. We'll see. So price does further take out this low, and then it goes back up and displaces. So let's drop down to a 5-minute time frame. All right, so 9:55. And so then here is our 10 o'clock candle. Again, we're bullish. Our drawn liquidity is this high, right? So we'll mark out our 10 o'clock open, and we'll change this setting to the 4 hour. So we'll mark out our 10 o'clock open. And so realistically, what my criteria is during the 10 o'clock open and what I look for within this is I like to see us go for some internal liquidity first, below the open and then see a change in state of delivery to send us higher. So we'll drop down to the 1 minute, and it looks like right here, this is our manipulation. So we are currently, so at the 10 o'clock open, it didn't print the wick. So right now we are going to print the wick, and on the 1 minute, we are inside of this right here. So this looks really good for our kind of bias for longs to go up and take this high, or these highs. This built up liquidity here during FOMC, or sorry, I think this was CPI actually on Tuesday. So we'll go up higher, see if we get a change in state of delivery, preferably above this high, and see if we get our entry. Okay, it looks like we just completely displaced. So let's try to see if we can find a pullback right in here, or actually in here, to validate a bias to go higher. Okay, a little bit of chop. All right, I'm gonna get in. We'll go 2 contracts. We'll go low risk. We'll buy, and then we'll put our stop loss right here, because below this protected low, because we realistically don't want to see it go any higher. And then what we'll be targeting is not this high, but I'll go for this liquidity pool right up here. This looks really good to take out. So let's see if we can get this. I don't know what the risk to reward on this is, but let's check. All right, it's about a 1, it's about a 2. So we'll take a 2 risk to reward. And let's see. Actually, oops, I did not mean to buy there. I meant to skip, but okay, it looks like we're in 6 contracts, but these are micros, so don't worry. Play a few candles. And we don't quite hit it. Okay, there we go. So that's trade 1, and I'll kind of tell you, I mean, obviously I've already seen this been playing out, but I'm just trying to give you guys a walkthrough of my mindset when I'm looking for trades at this time. But as you can see, our 10 o'clock window opens, and a few things I noticed is that we've already flipped our bias. You know, we've already swept this internal low. We've already created this order block. We haven't quite tapped into it yet. This is a breakaway gap. It should not be filled. So as you can see, we tap into this internal liquidity, and as I said, what I like to do with my model is if we're expecting a bullish 10 o'clock 4-hour candle, and we have 4 candle look back. So let's look back 1. So we'll mark these out. Where is the fucking, okay. So this is our 6 o'clock candle, and then this is our 2 o'clock candle, and then we'll drop down to a 5 minute. And this is our previous 4-hour look back, right? So if we look back in the past 4 hours, and we already know that candles are ranges, so this is your high to low of your 4-hour candle. So this is your 6 a.m. 4-hour candle, high to low. And then what we do is we sweep the low, but we know every candle is a range. So when this low gets swept, we immediately know we're going to come back and hit this high, or at least create SMT with it. And we can also go on the lower time frames, and we can use standard deviations to frame it. So I'll probably use, it's a bit of a big one, but I think it just about works. Because yeah, as you can see, -1, we have our accumulation. So let's see if we get some sort of retrace when we enter this level. Okay, we see our retrace, and then let's see, it's still in that zone, and then price breaks above it. So now, after the -2, -2.5 gets broken above, we'll look for longs up to the -4, but it could just kind of retrace into the -3, so we'll be careful since we just swept that high that we were looking for right here. So we've just taken that high now, and you can see us printing the wick actually. So if we'll change this back actually to the daily time frame, this is how I like to use my main. So if I'm looking for the daily main range standard deviations, what I'll do is I'll do it from the low to the open of the candle, of the daily candle. So for this example, I'm using the 6 o'clock because it's kind of just the, you know, market open, like true market, but true market's actually at 12. But let's continue. So yeah, there you can see it's projecting our main range. So when we go into this -2, -2.5 at this main range, you can see us displace and come back into this IRL after sweeping external. So external back to internal, and we'll see if this level wants to hold. I don't remember if it does, but we'll drop down to the 15. Yeah, Oh, looks like we do hold this 1 hour gap, but we create equal lows, which we'll talk about later because that's going to be a big draw on liquidity coming back into it. But there you go. There's your retrace at the -2, -2.5, and then we kind of go up a little bit higher. And then, yeah, this is kind of when the day ends around 8 p.m. and when Asia starts. So that's Tuesday. So we'll continue on Wednesday and see what happens. So right now, a couple things we can note if we're going to have like a fresh chart again. Still keeping an eye on this. We'll mark this out as our draw on liquidity. So DOL. And then this is our manipulation. And we can also project this range as well. So from this low to this high. So this is the low that broke. So when this high got swept, this is the low that basically created our breaker block. So I'll use the A, B, C, D. So I'll use the B to C leg to manipulate the deviation. And look where price is going. So you can see -1, we kind of enter this retrace. So then now if we're going to look at this again from a clean perspective, we have this fair value gap. We want to see kind of send price lower. And we'll mark out some major liquidity targets that was built up in the past 2 days as well. So we have these equal lows, and then we have this original consolidation in a market maker model. So this looks like a pretty strong area where price would draw to. And then I believe we have SMT here, but I can't quite check because I don't have the ES chart. But if we reverse from here, we definitely have SMT. I think ES actually went a little bit higher, but SMT is something that you should also look for. But right now, we have our external, so we swept this external range liquidity. We'll retrace back into internal, which is this hourly gap. So then we'll play a few candles, and we'll wait for 10 o'clock on Wednesday to see what happens. So 10 o'clock a.m. So we're just consolidating right now. There's Asia session, so there's 3 a.m. So this is likely our manipulation right now. So we've seen our market structure, quote unquote market structure shift, right? Like this is not a market structure shift. This is liquidity sweep. We're in a high time frame for value gap, and then you need to understand that when we shift below this low and we form these order blocks, that will confirm the price is going to change the state of delivery, and we're going to go lower. So once we actually truly close below this candle, then I'll be looking for shorts down to our liquidity levels, and then I think we can also play a few. So yeah, it looks like we do not close above it, but here we do. So I can already see standard deviation forming. So right here, this is our manipulation leg. And so then now we have targets here at the -2, and then the -4 should be this is our weekly main range, because this is going to be our high of week here at 3 a.m. During London. So then we won't expect price to come back up here at all. So this will be our main range for the weekly candle. So I'll standard deviate this for a whole week, and because usually Monday and Tuesday is going to be built up liquidity. At some point we'll get a Wednesday or Tuesday high of week. Sometimes it really depends. We'll get Tuesday, Wednesday. So Monday's liquidity will be used to target coming back. So we're close to that 10-hour. And as you can see, 930 displaces really heavily. So when this happens, when we see displacement and when we see price shift lower, what we want to expect for the 10 o'clock candles is to be some sort of accumulation, because expansion is followed by accumulation. But it cannot, it's just like if the market cycles, it can't just immediately, reverse. I mean, it can reverse after an expansion, but it has to first accumulate, and then it has to manipulate, and then it has to distribute. Or it can just accumulate and then retrace and then redistribute. So there's a lot of scenarios that you can look for, but I think this day was a little bit choppy for the 10 o'clock candle. And I also think there's news on this. No, Wednesday was the bond auction, so we'll see. So 10 o'clock candle. So what we'll notice is this one is, like I said, pretty choppy. So I personally would have traded this, but if you did, then here is how I would play it. So you have this change of state of delivery right here. This is your open. So price doesn't really create a wick, so we're expecting it to go print the wick and then push price lower. So right here is our order block. Price then shifts back above it, retaps into consequent encroachment of the order block. You would set your long tool right here, and this is just playing for the retracement. And then what you would do is you would target probably these prominent highs, and that alone is a 2 to 6 right there. Even though the delivery was really bad, would have been a really good setup as well. You could have likely actually just held up to this order block, but in hindsight, I probably would have just targeted liquidity at first. So this looks like a nice area right at this order block, because that looks like where we got off from. So that would be a 4 to 1 right there, just using this model alone, waiting for price to come into a higher time frame level, and then change the state of delivery, and then wait for the tap into the order block, and then play it up into the high. And we did sweep these equal lows right here. So this is a liquidity pool. So we just swept the lows, and then we expect for this to accumulate and then manipulate and then distribute, which you can see happen right here. So we get our accumulation after expansion. So accumulation, and then we have offset accumulation up into a higher time frame level. And I believe if we look on the regular trading hours, it does not show us shit. What is going on? Okay, yeah, no. I believe we create SMT with ES here, so we did on ES probably tap into this, but I don't know about NQ. Oh wait, no, this is Friday. Hold on, what did I just do? Uh-oh. Okay, let's go back, Wednesday. So there you go. There's your kind of if the market cycles, so you have accumulation, manipulation. And then around the 1050 macro, so around this 1 hour candle switch, you can see we kind of just pop back right above into the time-based premium above the 10 o'clock open. So pop right back up above here, and then price goes a little bit lower. So yeah, that's would have been a good day. Personally, I probably wouldn't have traded this chop once I'd seen it. Probably would have stayed out of it, and I believe I played this short here. But yeah, we'll continue, go on to the next day. But yeah, overall, as you can see, price kind of just stays up in this -2, -2.5. So this is like our main range kind of thing. So we'll play a few candles up ahead, and then we'll wait till Thursday. So as you can see right now, we have our market maker sell model in effect. So targeting Monday's low, or at least anywhere in a premium, or sorry, anywhere in a discount of this range would be good. So we'll expect Thursday and Friday to continue the trend, considering Wednesday is the high of the week. So yeah, as you can see, price does stay in this -2, -2.5, so it's a strong area that the market wants to retrace to. Go continue further, and then here we go, 8 a.m. the next day, and as you can see, a strong draw on liquidity is a 6 o'clock open. So we'll expect I actually called this on Twitter that I thought this level would be hit around here. This was a nice strong liquidity target inside of that main range, and we had already swept these equal lows. So now what we'll be looking for are these liquidity pools in the market to target, just based off us. Like I said, I have a PDF on Devil's Mark, and there's other people who also have one, like PO3 Trader and Trader Dexter. They have a lot of great stuff, but in terms of learning about Devil's Mark. But basically, this daily candle doesn't print a wick, so anything above it is considered manipulation. And what we'll be looking for is a high time frame PD array. So on the 1 hour, you can see we have this inverse fair value gap, or BPR, or whatever you want to call it, that the price comes back into. So that looks like a nice kind of area for us to expect a pullback. And then we also have some SMT here. I believe ES takes this high. I truly can't remember, but also your turtle soup right here. So turtle soup, change in state of delivery, and then now price is going to likely try to retrace soon. But we'll drop down to a 15-minute time frame, and we'll look for some entries. So overall, our drawn liquidity targets are these lows right here, and anything right here. This is also a good drawn liquidity. So we'll look for a possible retrace maybe, and see if we can get an entry. Actually, I think right now we've kind of entered this fair value gap, and then we've also come into this mitigation block. So this looks like a nice place for shorts too. I'm very confident in these. how do I put my I'll put my stop loss right up here, and I'll target right around here. And then I don't know why it just triggered. Oh, I guess. Okay, it looks like this candle stopped me out, but I'm fairly certain. Hit that draw. Okay, so maybe stop loss placement should have been a bit better. Maybe above this high right here, inside of this mitigation block that we kind of reached into. So maybe that would have been a nice area, but as you can see, the draw on liquidity has been hit. So we'll look to see if price wants to take out this liquidity right here in the 10 o'clock candle coming up soon. We'll try to make back our loss on the day. So price is a little bit erratic. Okay, drops down, we go lower, and then we boom take out all this liquidity in one candle on 9:45. So let's see. 10 o'clock should be unfavorable, but we'll see how it reacts. So 10 o'clock opens. As you can see, we have our devil mark now. We'll drop this down. But we'll go back on the 1 hour, see what we want to look for. We still have this liquidity target that wants to get ran, so we'll be looking to see if price wants to maybe reprice back into here, or if it wants to just continue down and take out this liquidity. But overall, this is our key level we're looking for in the market. Take this away. So right here, as you can see, we have our retrace on the 10 o'clock candle. But as we all know, in my opinion, I've also learned this from Flux Trades on YouTube, the 10 o'clock candle can only either continue or it can retrace and then continue. But it can't, the 10 o'clock candle won't always just automatically reverse, but sometimes it can when we have the 9:30 Judas, but in this case, this is just a continuation. So we'll see. So we'll be looking for, in the model, we'll be looking for a close back above here and see if we get some kind of long opportunity. So we'll be waiting for this candle to close back above here, and that's when we'll take our longs. Change this to the 4 hour. Okay, so we got close above. Let's go on the 5 minute. Looks good. I'm going to take these buys right here. I'll put my stop right below here. And then we'll be targeting standard deviation like that. And let's look to target the -1 first. Let's see. Okay, so what I'll do here is, since we've already hit a lot of this internal liquidity, put my stop to break even, and let's see if we hit our target. And there we go. That is how it's done. And as you can see, this is a simple protraction on the 4 hour candle. This candle's low right here. So this candle's open, so this is our 10 o'clock open. We are actively printing the wick, but we know it's just a retrace at the end of the day. So then we go into our retrace, accumulation, and then this is likely manipulation to send us lower. But I believe at that level where we took our buys, this is a 2.6 RR right here, and simply no drawdown either, go straight to the target. And this is the power of this model. This is the model that I've been using consistently, and this model really truly delivers. If you want, in this case, you could have used the breaker. So from this candle's high right here, and then we'll see if price retraces from there. And yep, it looks like we do get some retrace, followed by turtle soup, and then dump the market right here. So that's always nice to see, because this is just our retrace into a premium. So we take our fib from here to here. You'll notice it's our optimal trade entry right here at the at the 70% level. So this is when price also aligns right here with our -2, -2.5. So this looks like a perfect area. Equal lows right here. So this is your this is a nice draw on liquidity you can look for as well. And we'll see if they get hit. And not quite. There we go. They do get hit. And then we also print more equal lows. So we'll look to see if we can get another entry, possibly. A bit of weird price action, I won't lie, but there you go. Equal lows were hit. That's another draw on liquidity. So 2 of them formed. So we're just engineering liquidity here during AM. And then overall, I do think this low right here, this 10 o'clock low, will get hit because, as we said, this is just a retrace. So we'll continue playing candles. Sweep those relative equal highs. Inverse fair value gap. And then you get your another turtle soup right here. You get your SMT inside this fair value gap. Price then retraces to the order block. So we'll see right here if we want to target the 10 o'clock open as a nice draw and get short in inside this order block for the market maker redistribution. So we'll take 2 here, and then we'll put it right, just conservative, right above these highs, and we'll target the open. All right, well, looks like our stop gets hit there, but I do think at some point we'll hit this low. We'll see if this gets inversed. All right, there's our change in state of delivery. We'll try to get another entry in here. See if we get a... Okay. Very choppy price action. Let's see how this plays out. And then I believe SMT here. Yep, I knew it. We have SMT at these lows with ES. So that's the reason why we did not hit this candle right here. The reason why we didn't hit this is because it has SMT. So SMT dipped into the 10 o'clock open, but NQ does not have to. This is a technique that they use to, push market and, think traders think that this is going to get taken, but no, they'll use this to go higher. So I think we'll see. It's just a bit of a consolidation right now. But yeah, anyways, I probably will wait for the 2 o'clock candle because the same thing can work, but the 10 o'clock candle is more probable to catch better entries. So we'll wait. Yeah, so obviously I think we dip down again at one more time. These equal lows were formed. Okay, then we'll drop. Looks like we go back above into the 10 o'clock open, and we have a lot of low resistance liquidity. I think could get swept. And here's our 2 o'clock, and then it looks like we do not have a wick forming, so we want to look for shorts possibly, and back into this original consolidation. Now let's see if we can get an entry. Just go short. Okay, so it looks like this high was just taken. We just ran a liquidity pool inside the original consolidation right here, this rejection block area, this order block. So let's see if price wants to dip below this kind of area and see if we get a closure. Okay, looks like we sweep it one more time, so we turtle soup it. Alright, this looks good. Let's try to see if we can wait for this gap to be inversed right here. Alright, well, we'll enter. I don't like that close. Okay, we'll enter 2 here. Stop loss or take profit right here. Stop loss right above here. And there you go. That's hit. So based on this, I mean, honestly, the one that we took earlier wasn't great in terms of our model. I don't know why can't I? Anyways, yeah. So I think we're 2 for 1 on the day. Just using this. So the same thing can be said for when you have a candle right here. When it doesn't print the wick, so you can wait for a change in state of delivery and some kind of entry pattern. So this breaker right here into this fair value gap, so unicorn model, and then you just basically you can use the open as a target, and it's going to hit a lot of the time because we need to print the manipulation in order to go higher, or anything above this is the manipulation, and now price is going to target these liquidity pools right down here for a market maker model. after coming into a premium of this buy model, and then now we should see price with an SMR in reverse. Bit lower, but yeah. See, the market makes an effort to now print that wick, so if we were actually truly bullish, then we would use the open to here, and then change this to our standard deviation. And then, yeah, it doesn't really quite work out because it looks like we were just printing back into a time-based premium. So this should be the wick actually, and then see price go lower from here. So we could have held our shorts, but honestly, I'm fine with getting out right here. We got a nice entry on the close of this gap, and we targeted this open the open right there. But overall, that's kind of using the logic of these candles and the open, high, low, close. And there you go. Dump ski right to these lows. And honestly, this was a good. You don't need to catch a whole piece of the whole move. You can only catch a portion of it, but it's really nice to see as well. But overall, yeah, that's gonna be it for me because I traded a lot of Friday, and I kind of already know a lot. But these ones, I kind of just want to go over because these were the really nice ones that I saw during the week. So I believe the model is, I don't exactly remember. I'll go back and check how many times it won, how many times it lost, and tell you guys. But this is a pretty high win rate model. And if you just understand the narrative and the context and why price should do this and when it shouldn't do this, then you'll understand that, you know, we did eventually, we're going to eventually hit our draw on liquidity if we go a little bit forward. But 50% win rate, but I kind of messed up the stats, but that's fine considering that we ended in profit. But I think it's more than that. I need to go back and check all the trades we took throughout the past days because I skipped a little bit on accident when I pressed the RTH. But as you can see, price looks like it does dip into our main range here from here. So yeah, this is kind of how the week ended on Friday. So dip into the main range from NFP. So this is our monthly manipulation. So we can expect some sort of retrace next week at these kind of liquidity pools. This looks like a nice setting up for a buy model for an original consolidation back up into these highs. I don't think we quite dump yet, but there is a possibility that we could just go for the 20-day low and then the monthly open and dig into it and then come higher, but we'll see what price wants to do. But anyways, that's it. Make sure you guys go follow the Twitter. I post a lot in there, a lot of good gems, a lot of call outs on like crypto and a bunch of other stuff. And I hope this live stream kind of helped if you guys have any questions. It's going to be a really long video. I know it's going to be really fucking boring, but if you guys really stuck to the end, you would have found a lot of good sauce and a lot of good understanding on how I navigate these candles, these high time frame candles, and what I like to look for in terms of my model. But, you know, I hope you guys enjoyed, and take it easy.
All of my diamonds, they bite. All of my diamonds, they bite. All of my diamonds, they fight. My diamonds, they fight for attention. If you fucking me, stay on my mentions. She get fucked and then kicked out the mansion. If it's beef, then we handle it fancy. Oh, that's beef, then we slide with extensions. So that it's smoke, then it's council. If it's smoke, then he's better than council. If it's beef, then you better the Glock. Told my essay, take you off the stanza. It's the cheetah print up on the dancers. I might just hit me a dancer. Got a shorty that work at the cheetah, so I just walk in that bitch, don't gotta stamp her. I'ma bend her over in my